Let me bring in the business sector now, because while politicians and bankers have been trading blows over interest rates in recent months, small business operators have often struggled to be heard. To find out what they're thinking about today's interest rate decisions and the banks, here's Neil Woolrich.
Well, many business owners will be disappointed that the Reserve Bank has left interest rates on hold this month, perhaps none more so than those in the housing industry. I'm with Jan Gurn, who's the Managing Director of Modscape, a Melbourne-based business which delivers prefabricated modular homes all over Australia. So, Jan, how disappointed are you that the Reserve Bank has left interest rates on hold this month?
Neil, I think it's very disappointing. Probably there's no more important time at the moment than to keep the market motivated to continue to buy and build.
And the major banks have said that their funding costs are rising, so they may deliver an interest rate increase out of step with the Reserve Bank. Do you have much sympathy for their argument about funding costs?
A small amount of sympathy from a business point of view. They are trying to make a profit at the end of the day, but I think the profits the banks are making are so out of whack with the rest of the community that any saving that can be passed on should be passed on.
The cost of credit remains a sore point for many in small business. In 2008, the interest rate on a small business loan was about the same as a standard variable home loan. But since then, the gap has widened to as much as 1.5 percentage points.
The impact upon the economy is the thing that worries us, because if we're going to deal with change, we need a small business sector that is healthy and able to deal with that change and able to innovate.
Small business is much riskier, and even with a loan secured against the home, our experience is that the chances of the loan going bad are much greater, and when it does, our ability to recover the loan is less.
Meanwhile, the appetite for credit is drying up, with one survey showing the demand for business banking fell 3.5% in December and January.
Business confidence is low, and I don't think it's low because of anything the banks are doing. My suspicion is that more than anything else, we're seeing a demand-driven decline in credit rather than a supply-driven one.
Well, interestingly, we are making more sales at the moment than we've ever made in our entire history of operation, but we also have more sales that are on hold through the inability to achieve or receive finance from the banks.
Now it's up to the Australian banks to decide whether they absorb more of the rising cost of funds or raise rates independently of the RBA and face a political and community backlash.